Hi everyone. Very good morning to all the panelists and all the attendees here. We are thankful to all of you for joining on a Saturday. Though nowadays every day feels like a Saturday and Sunday, but still Saturdays keep some more time off to take care of knowledge sharing as well as knowledge incremental activities. So I would start myself. I'm Ashish Anand and my co-founder Abhishek. We are from Whrrl. Whrrl is an agri-fintech startup. And given the scenario wherein we are seeing that after the MSME sector, the Indian farm sector, the agri sector has been the most severely hit by Corona. More than Corona, the side effects of Corona, that is a lockdown. It is estimated that around 15,000 crore worth of horticulture crop is getting lost because it was not being able to sold on time. And the sector losses put together may be much beyond that as well. However, we are in the middle of the harvest season. So at this time, any sort of assistance which would have been possible in pre-harvest or for the next harvest is quite difficult at this moment of time. So the idea is, can we use something and instead of depending only upon the dole outs from the government, which are of course not very much, 2,000 per family doesn't make much of a cut in these times. The thing is that can we use some solutions from the financing world, from the world of banking, from the world of capital raising, which will be helpful to farmers in maintaining their income as well as helping create sustainable income in future as well, because we, of course, all of us are saying that Corona's impact may not be only in the short term. A life-changing event, such an event which happens only after maybe 50 to 70 years or 100 years, the way people have been living, the farmers, non-farmers, everybody's life will change. Are farmers ready to cope with those changes, and how we can help them from the world of finance? Keeping that in objective, everyone is here. So I will introduce the panelists. Dr. Srinivas, he is a principal scientist at ICAR-Naarm and also CEO of the TBI of ICAR-Naarm, that is AIDEA. Mr. Hemendra Mathur, who is venture partner at Bharat Innovation Fund. Mr. Kiran Kumar Putta, he is National Product Head for Agri Banking and as well as Commodity Finance in IndusInd Bank. Prasad is from Yes Bank. He's the Executive Vice President there in looking after the Agri Banking. And finally, Rajagopal, who is from Samunati. Samunati is an agri-focused NBFC, as most of you will be aware. Many of you will be working with Samunati as well in some capacity or the other. Hari looks after the strategic initiatives there, and he is head of strategic initiative there. With this introduction, I would like to take, ask the panelists to give one small answer about what do they feel that how COVID-19 and has affected the farming sector. And do you think that the impact will be long-term or short-term? What will be the short-term and long-term impacts? Just 1 minute introduction on this from all the panelists, starting from Dr. Srinivas.
Okay, Srinivas, you have to unmute.
Yeah. So, good afternoon, everybody. Today, we are talking about the COVID-19 and its impact on agriculture. And as Ashish has already told that there is, in horticulture sector itself, there is a big loss because of a lot of issues like supply chain or at labor shortage and all these things. But yes, we have to look into the future, and future I think is not that bad for agriculture sector, because not only because the government is giving a lot of soaps, but also because it is the basic necessity, and every one of other sector
Dr. Srinivas, I think we have lost you. If you can hear us.
Okay, so we will wait for Dr. Srinivas to come back. Hemendra, what is your opinion on how the COVID has affected the agri sector?
Yeah, I know. I think in the short term, yes, there are challenges. There's stress in the rural markets. It's a very unique situation when consumers are paying a higher price and farmers are realizing sort of lesser price to the extent of 30%, 40%, 50% across commodities. So clearly the supply chain has kind of chogged for a few days. It's changing for good, for sure. But we never saw this kind of disruption ever. And the magnitude of disruption got sort of amplified because it's a harvest season. Wheat alone is about 110 million tons of harvest. And we have oil seeds, pulses, mustard, mangoes, grapes. So yeah, it's a bit of a challenge, to be honest. But I also see it as a silver lining for a long term kind of a future for agriculture. This crisis has taught a lot of people that the agriculture is one of the very, very important sectors of the economy. And I'm of the view that we are going to see many more policy reforms. What we were hoping to happen in next 10 years may just happen in next 2 to 3 years. So I think that's one thing. We are going to see much more participation from industry, from corporate, from policymakers, startups, and a wider ecosystem, which hopefully will be very, very positive for the sector in the long term. I'll stop here. Ashish, you're on mute.
Welcome, Dr. Srinivas. We lost you in the meanwhile. Yeah. So, Kiran, how do you see impact in agri financing of COVID? Has it affected the lending of tech per se?
Yeah. So before touching upon that, Ashish, I think this COVID had a real big impact in a holistic way. If you look at it, has brought a lot of lacunae in our entire system. While we say agriculture farmers, much goes into the sustainability of a family who is dependent on agriculture. Maybe there is one person who is a migrant laborer in that. So that has also come out, the hardships that the migrant laborers have faced, and all these effectively will have an impact on agriculture, because the migrant laborers also send some part of their money to their families back home who are again dependent on agriculture, who use this amount towards investment in agriculture. Similarly, the healthcare facilities which are required for the rural people, probably whether they are in urban, semi-urban areas or in rural areas, that lacuna has also been shown up now. Like even in urban areas, the medical facilities have been so insufficient. Only people, who use technology like us, probably we were online with doctors if there was any, issue. But what about the farmers, who have been there so, I mean, speaking of the impact, it has actually thrown open several challenges, that probably needs a lot of thought that needs to be put up in the long run as well as the short-term nature. And coming to agricultural impact, certainly as Hemendra has quite effectively explained, there are a lot of issues that we need to deal in short term as well as long term, and the disparity between the prices that we pay and the farmers is quite visible now. The entire horticultural produce is suffering now, with no takers, whereas people who are living in urban areas, they are looking forward to get it, but they are not getting it. So they are paying higher prices. So that dichotomy is still there. Yeah, we can probably discuss in detail, during this call.
Hi, Hari. Coming to you about your opening remarks on the impact you see on of COVID-19 on agriculture, and especially agriculture finance per se.
Sure. Well, just to one line, and Ashish has very well explained, I am from Samunati. Samunati is an agri value chain enabler. We provide working capital, catalytic credit and market linkages. Now, our view on the COVID crisis is currently that somewhere there are disruptions in the supply chain, as everyone is well aware, and farmers and farmer collectives, the intermediaries, are facing the challenge of labor, logistics, and transport, because a lot of labor in many states is migrant labor, and because of the displacement of that, there is an issue with the key agricultural activities. If you look at the transportation between the mandi and the farm, but between various levels of aggregation, there is a problem, and transport and therefore the logistics. So and because of this, working capital is getting choked in the system, because either your receivables are not getting realized, you have finished goods which you're not able to sell efficiently, and therefore you're squeezing your creditors. So the typical working capital cycle is getting stretched. Now, the good news is that because most of agriculture is in essential commodities from a classification, by government rules, they are allowed to operate. So there is no ban on their activities as such, but the real ground realities of labor, logistics, transport, movement between districts is the one which is proving to be quite difficult. And then that is why our customers also have similar problems. But the good part is at the cultivation and the economic activity, there is no major disruption per se. There are challenges, but not an outright disruption. So that is why we feel that we will be seeing how these challenges get resolved as people get access to the inputs of labor and logistics, but then also the challenge is how to then maintain the working capital support, given that the Rabi season harvest season has started. People anyway need more working capital to do this. How do we ensure that there is enough working capital for the procurement, enough for the next season's sowing, enough for the economic activity? So that's the key challenge of maintaining the working capital support to reach the farmers and farmer organizations.
Thanks, Hari. Prasad, how do you see the impact in the food processing sector?
So, for maybe the first time that we are seeing that not only is the production, disaggregated, standalone farmers, but even because of, social distancing, the consumption is also, kind of standalone because of social distance and all. So you need to connect, both sides by whatever aggregator mode, startup, or, some aggregator who can look at both supplies and demands, because the consumer is just not right now getting good many varieties, whatever he requires in the right quantity. So that is overall which is happening. And moving forward, working capital, what we see perfectly right from even the seed grower to the agri inputs channel, to the farmers, everyone, or SMEs, working capital is going to be a big challenge. And coming to your question on, the food processing, yes, I think right from primary processing, which is cleaning, grading, sorting, to secondary, which is, cut fruit, vegetable, or even tertiary, that will be a very, very big, initiative going ahead, because everything has been disrupted. So there is going to be huge amount of problems for exports, like mango season, which is right now. There's going to be huge challenge, whether US or Japan and all. So I think a lot of exports cut material is going to get into the domestic market. So obviously, because of the supply chain disruptions, it's not going to get fresh sold. So you definitely need to do a lot of processing. And I guess that is where existing, whether clusters or, food parks or standalone processors, they need to either, quickly process it to pulps or, frozen items, whatever. But I think that's the way forward. Otherwise, farmers are still going to get into, a lot of problem with the materials like, mango, etc., which are going to come now.
Thanks, Prasad. So thanks everyone. Thanks the panelists for the opening remarks. What we are going to do that we will take a panel's view on several aspects of financing to farmers, both pre-harvest, post-harvest, and value chain financing. And then we will open the session to the to answer the questions of the attendees. So 20 minutes we will allocate towards the panel's views. After that, we will take up all the questions which are popping up from the attendees. Quite a lot of questions are coming, very valuable ones, as well as many pointing ones as well. So here I will start with Dr. Srinivas first.
Okay.
Yeah. Sir, so I would like, can you please tell us more about, so yesterday RBI announced NABARD 25,000 rupees crore.
25,000 crore rupees. And it is also going to raise something on for NBFCs and MFIs also. It's going to raise a big chunk amount of 50,000 rupees. Apart from that, it has actually given something more on the liquidity side, that there should be more liquidity towards banks so that it can have sufficient firm for what Prasad was saying, that you have to give more working capital loans. Everyone was basically emphasizing on working capital loan. It was also important. Therefore, a lot of measures have been taken yesterday, at least these four, which I can really say. One is NABARD, they have given to that. Then they are continuing that 2% interest subversion to the banks and all those things, and granted moratorium for 3 months for the repayment of the loans. These were all there from 27th of March till yesterday. There were some measures were taken. Basically, as far as I can understand from the point of view from the farmers, that this time we have to be very, very critical towards the farmers' need. What farmers need as on date is a labor availability, or if it is a mechanized harvester, you have to put them to the allow the people to take their machines in interstate or inter-district transport, which is not happening in many of the places. I don't say every place, everywhere it is not happening, but in many places it is happening. That these are not available to the farmers. At the same time, lot of migrant workers who have shifted from the urban to the rural area, the surplus labor, probably they can use it through Manrega, which are not, they are not actually registered for Manrega as on date. They are all urban laborers. Can we use these people in the urban laborers? That is one thing. Another thing about the loan which is already there. If not deferred payments, can we really have the waiver of the at this particular time? I'm not sure, because this government has to take every time they say loan waiver is very common for these people, but this is the time that we should really consider it. If not, if loan waiver is not possible, don't take the interest and defer the payment of the principal at some later crop. And also fast loan, crop loans, maybe through the digital, which is a very, very important thing. Digital transformation towards the digital platforms for financing as on date is the most crucial thing. We have to move fast as a government policy, as a private players, if someone can think this is importantly. And most importantly, if we really want to see that farmers get a right price, they have to aggregate. And aggregation is now possible through farmers producer organizations. And these farmers producer organizations have to actually look into the whole scenario, how to link each and individual farmers. If they have not farmed, they can join some other FPO which is nearby to them, so that they can have a collective bargaining power, which can be given to the so that they can get a better price for their crops. These are the things which are important. But at the same time, I also like to suggest from the farmers' point of view that farmers should have should take a lot of prudence in spending the money also, especially for the production purpose. They should actually follow the scientific crop variety at 50 to 60%, as per the estimates of many of the studies. We are not following the scientific crop production practices. If they do it, their cost will reduce and productivity will increase. The important cost disciplines are to be there. And if they grow scientifically, what they do is that they don't waste money on spurious or unwanted chemicals or fertilizers. Even fertilizers in many places are being used very heavily. That farmers has to take care, and definitely probably many of these 200 people who have around 170 people who have joined, may some of them may be directly linking to the farmers. They can tell to their farmers that these have to be taken care, and you have to even farmer has to be financially prudent while doing the production part. This is what I wanted to say at this moment.
Thanks, Dr. Srinivas. So picking up from Dr. Srinivas' thread, that automated or fast movement digital lending to farmers, digital lending of crop loans, I would like to come to you, Kiran, and ask you about what are the solutions what banking industry is working towards. How do you see adoption of digitization in the lending segment by the farmers? The JAM has certainly created the platform on which payments and the distribution of benefits have reached the farmers. But lending, online lending especially, has remained a challenging aspect, has not seen the adoption. How do you see that banks working in that, as well as adoption by the farmers in that particular segment?
Right. Ashish, I think, if we have to have a sustainable income for the farmer, then his income should be as diversified as possible. Now, when we talk of diversified incomes, there are several financial products that come into play. It probably need not necessarily be only lending. Lending is a major product, but also there are other products like insurance, healthcare insurance, education, and so on. So holistically, we as a banker, we need to take care of all these issues when I'm trying to lend to any particular farmer. Now, given the present scenario of COVID and the kind of challenges that we have seen, IndusInd Bank per se, if we ask our own bank, we are trying to work on 5-6 different models of reaching to the farmers. So one of the first model is the supply chain model, because we have seen that this particular COVID has actually impacted the entire supply chain. I was just going through the questions that several of our viewers have posted. Most of the questions have been on this particular aspect of there has been a supply chain disruption where the farmers are throwing away vegetables or fruits, and where there is still demand in the cities. So I'm thinking of funding to such kind of supply chains where this entire supply chain is made sustainable. Like, for example, to give you an example, if I take Amul model, the Amul model is the most successful model across the world, wherein the entire supply chain is streamlined. And certainly we can say that in the Amul model, the final beneficiary is the farmer. And look at the kind of product that they have. The product is milk, which gets spoiled probably in a 2 days time, and still they have managed the entire supply chain. And most of the banks have been funding Amul kind of entities. So what I'm suggesting is that all banking community, all the banking industry should focus on such type of products, designing such type of products which suit entire supply chain funding and where it is made sustainable throughout. So certainly there are certain regulatory aspects that needs to come in. And certainly this can also be digitized, like, even the funding for, say, the milk farmers in Amul is entirely digitized, right from the time they sell the milk to, the time they receive the money, entire thing can be digital. Similarly, I suggest that there should be regulatory environment by way of law or, otherwise where there is a private-public partnership, such that this entire supply chain, which has been the disruption during the COVID period, needs to be built in such that it comes from farm to home, and there needs to be some professional or say strategic, well-experienced team of probably NGOs or the farmer producer organizations, with support from the government, with support from the lending institutions, which build this entire infrastructure like the Federation for Amul has done. So I'm looking at developing such kind of systems. I rather suggest that all banks should look into it, and all NGOs or venture capitalists who want to really enter into the market and do some sort of impact investment or social investment should look at such type of creating such structures. That is the need of the hour, today. Similarly, I think recently RBI during last year in December, they have really released a very good circular on co-origination. Therefore, all banks are now looking at having these co-origination networks through NBFCs, and already there is an existing network of MFIs through which they are able to reach the farmers, and through co-originations through NBFCs, I think as a partner, NBFCs and banks, along with the NGOs, should try and build as many farmer producer organizations as possible, and then build this entire infrastructure. Now, this entire infrastructure of supply chain includes your warehousing, which again can be completely digitized, dematerialized. Like for example, your own organization Whrrl does. It can be on a blockchain, it can be on a DMAT format where it is completely digitalized. So apart from these things which are to be newly created, I think there are certain progressive farmers, who are like new startups who are coming up with their own ideas. There is a need to encourage such type of startups. I know that the success factors of startups will be only 50% or probably even 25%, but not every startup will become like a Flipkart or a Swiggy or Zomato. That is certainly yes, but even if 25% of such startups or even 10% of such startups have an impact and grow to such levels, I am 100% sure that such kind of startups will have a large impact on the agri sector. So I feel that we need to bring out design products. Probably maybe if you are funding a startup, then you can tie up with SIDBI for to cover them under CGT MSc scheme, and then absolutely every bank should take it on them that there should be some startups which needs to be funded, basis which probably that impact in the longer run will be really, really very large all across. And certainly, yes, the post-harvest financing models in terms of the supply chain, cold chain, warehousing, these do not actually have a regulatory framework. While WDRA is there, still I think the regulatory framework needs to be strengthened, responsibilities needs to be fixed, so that banks feel that there is no risk in such type of funding, or there is low risk. I will not say that there is no risk, but at least the risk should be minimized, so that more and more banks fund more freely to customers, rather than on basis of customer assessment. It should be on the basis of commodity risk. So such kind of environment still needs to be built in. So there are these different types of models on which IndusInd Bank is also working, and I'm sure there are other banks who are also will be working on these models.
Thanks, Kiran. That is quite a comprehensive answer and covers a lot of aspects of financing. Hari, I will come to you, and because you are especially working in the agri sector, I would like to understand from you that what are the value chain financing you are doing at Samoohnati, and what are the models you have adopted? Are you also looking at adopting, because you were earlier with Rabobank, so are you also looking at what are the other models which are practiced outside of India and can be brought to India? Can you throw some light on that, on value chain financing?
Certainly. So the value chain finance model, Ashish, is helping the lender separate the risk of the transaction and the risk of the entity. Because typically when you look at a balance sheet of a farmer organization, and I will first address the farmer organization and through that the farmer, because individual retail farmer financing is on a time, cost, risk scale, it is suboptimal for most financiers, which is why we only made the progress which we have made till now, though in absolute terms it is high. But in value chain finance, we look at financing the transaction based on the relationship between the buyer and the seller, which means the act of cultivation has been completed. And now you have a commodity which is ready, which requires post-harvest finance. So value chain finance, for the most part, deals with post-harvest finance. It can also be applied to pre-harvest finance. But when you give post-harvest finance, you can take comfort on who is a buyer, typically a stronger party than the seller, who is the farmer or the farmer organization. Which means on the based on the evidence of delivery of the goods, you can take a credit call on the buyer and give a credit period, which means you pay off the seller on day 1, and on day 30 or on day 90, you get paid. So this is opening up and unlocking the potential of all the small borrowers who otherwise, based on their past track record, profitability, fixed asset collateral, which can be provided as a security, would not have got this funding. So value chain finance model itself, or purely if you look at a post-harvest financing solution, opens up the lending horizon quite a bit. Now, why only receivable financing or bill discounting as this product is? Warehouse financing is also a very important product which has not been explored at the level of the smallholder farmer or the smallholder farmer collective in this country. Whereas if you look at the global experience, it is commodity finance or warehouse finance which has been a game changer for financial inclusion in most of the developed countries, especially in the European countries as well as in America. So warehouse financing applied at the scale of a smallholder farmer or a collective, which means it requires storage or warehousing capacity which is closer to the farmer at the primary producer level. So we have to address those challenges, and the availability of more collateral managers who are able to or willing to operate at the primary producer level, or the availability of blockchain technologies is something which is going to propel warehouse financing. But clearly, this is one solution which can open up financing at the collective level. Now, if you look at the current situation, there is a need for priority working capital, which means in addition of whatever limits are available to the customers, there is a need for fresh working capital, because unless you put in more money, how will they be able to overcome this situation? And for that, as Kiranji suggested, there is a need for financial institutions to come together, whether we come through co-origination or direct origination or a club syndication kind of arrangement. It is important to pool different types of capital which can operate up to their risk threshold. So similar to how in the corporate sector it happens, a consortium approach to farmer producer organizations or agri enterprises. And certainly there is a role for risk capital, which means the NABARD, the SIDBI, a type of Apex organizations, they have a role in providing credit enhancements or gamification instruments to willing financial institutions who are ready to take risk on this sector, provide the working capital which is not there, or provide additional working capital. So therefore, a huge role for a NABARD and SIDBI. And it's interesting, Kiranji brought up SIDBI, because SIDBI so far has not looked at agri as its domain, but it's an important discussion to have, because the CGT MSc is as applicable for agri enterprises as it is for non-agri. So clearly a huge role here for gamification instruments, for institutions to come together, because it's always going to be an issue of how much risk, how much liquidity is available to whom. So together we can come out stronger. But certainly value chain finance, receivable finance, warehouse finance is useful for post-harvest financing. On the pre-harvest, our philosophy is we should provide input financing through the collective, because difficult to otherwise underwrite the farmer on a retail level for inputs. So therefore, provide an input loan to the collective so that they can purchase the inputs and give it in kind to the farmer. So the relationship at the farmer level is one of kind, not of cash. And indeed, Sammunati is also working on very innovative pay card solutions, which can be a closed loop card, which is a farmer loan, and that card can be used only at the input shop of the farmer collective. So it's a closed loop system where you kind of mutate the loan between the collective and the farmer. So that is one innovative medium of providing input finance to the farmers, because clearly that's what they need at this moment for the next season, for example. So broadly, you have a suite of instruments. Obviously, one institution cannot solve the problem on its own, because there will always be a constraint of risk appetite per borrower as well as overall liquidity, especially in this COVID scenario. So together with like-minded institutions who can pool in risk and liquidity, and taking advantage of risk capital brought in by philanthropic institutions, impact institutions, as well as the Apex institutions on the government side. I think that would probably provide a comprehensive solution for evacuating clients from stress, but also providing them the additional working capital they need to overcome these circumstances.
Great. Thanks, Hari. It covered the entire gamut from pre-harvest to post-harvest, and no doubt, those are the financing tools and those are the financial innovations we are going to need in future as well to sustain farmers' income, make it more sustainable, help them increase the income, as is the goal of the government as well. Prasad, I would like to come to you at this point of time and ask a question on ask my question to Prasad will be the one part which we usually, when we talk about farm finance or agri finance, we talk about the farmers. What about the entrepreneurs in this agri enterprises, especially in the in the food processing sector? So, do you see what sort of financial tools and innovation are needed there? What we can bring there for them? Can we bring, and how do we, like Kiran also mentioned about SIDB, what role we can play, the SIDB and other banks can play in that particular segment on subsidy, non-subsidy, and lending part?
Yeah. So actually, now latest the definitions have also changed, right? Now micro enterprise is also 5 crores and lower, and similarly small business and MSME. The whole definitions they have changed now. So keeping that in mind, and most importantly, moving forward, whatever is the scenario. The opportunities are that there's a huge there will be a huge requirement for exports, because the other day even APEDA was saying so many countries have now reached out to India. So I think there is a lot of scope for exports, and which can be taken up by all these entrepreneurs, whether they do higher tertiary level of processing or somewhere in intermediate level, or even just plain sorting, grading everything and sending it. I think the APEDA people were saying that Singapore for the first time has reached out, or European countries and so on. So I think that is where these guys can play out. And immediately what can come, obviously for a bank, then as even the previous panelists were discussing, yes, there could be some kind of a warehouse collateral based, or I think now moving forward, even pulps or milk powder, all of them, those can also be given against a particular margin. So all these aspects where we keep some collateral, which a right collateral management company, and then giving some money to the entrepreneur, that is also possible. And also there are other non-fund based instruments also which could be possible if there are a lot of orders, purchase orders and all, which are coming from abroad, depending on the risk. And as Hari also said, I mean, it's possible that with risk capital, if someone can do a first loss, even that is also possible for bankers to look at that kind of opportunity. Maybe we could also kind of loop in some multilateral corporates who would be willing to guarantee a small first loss, and then the regular bankers riding on that and trying to quickly provide money. Because right now the important thing is material is getting wasted, that needs to get converted, and there is a huge demand abroad or even domestic. So I think either we do it now or it will be never. So I think we need to seize the opportunity in next 1 month or something, quickly convert the materials, export it, so that once we capture the market, then for the next many years, these are all disruptive things which have happened. They are not going to come back. So the foundation that we lay now to capture the markets will remain ours for a very long time to come. So I think we just need to pump in money to all the entrepreneurs or farmers or FPOs, capture the market, whether it is domestic or whether it is the exports. And yes, all the financial institutions providing working capital or against a collateral will be the winners. So I think that would be a short answer. Capex and all, no, I don't. I mean, it's going to take a long time. Right now, I think it's purely material is there's a value to it. Just give a margin just have a margin and then give money to across the value chain, because there is a short term disruption that has happened. Like Hemendra said, crop is there, wheat or mustard, but there is someone intermediary, adat, kacha or pakka had to give money to the farmer, which is not there. B, the material has to get sold and converted, or that is also not there. So, and also the farmers now need money, say till mid or May ending, to buy all the inputs like seeds and all. So there is a temporary mismatch is definitely there. So definitely banks have a very, very big role to play across the entire agri value chain. Yeah.
Thanks, Prasad. Yeah, thanks, Prasad. So I have kept the best part for the last. So bringing Hemendra here, and my question to Hemendra will be, we talked about the lending and lending related products. What other than lending related products you see which can be helpful to the sector? Farmers, APOs, value chain processing companies, other or startups even who are going to or willing to work in this segment. What other sort of capital can be available? What other sort of products which are available? Are there risk capital which is not to be returned, or the soft loans, social capital bonds, something about that? I would request you to speak on those financial instruments.
Sure. So I'll come to that, but broadly I want to talk about 3 reforms that I want to see post-COVID. The first and foremost, I think agriculture right now is a state subject, right? I don't think this federated model of agriculture is working as it should be in this hour of crisis. Over last 2 weeks, thanks to my team at FICCI, we have made multiple representation to the government on the reforms or the changes in the policy that we need post-lockdown. And we were all surprised. The government was very supportive. A lot of those orders were approved within hours of making a request. The challenge was from order to move from the central government to the state government to the chief secretary to the district collector to the local administration to panchayat. I think it's a very long chain, and that's why the implementation of a lot of these things is not uniform, and we got all kind of stress calls coming from the ground that mandi nahi kar rahi hai, truck move nahi kar raha hai, and all that. So I think we need to think, we need to have an India view on agriculture, and below that we can have a state view. But we can't have a view where the communication is not happening. There's no single point of view. Whether you are a startup or an industry or a farmer, you don't know where to go, right? So I think that has to change fundamentally. We should be thinking about it. I think this crisis has really opened that up big time. So that's number 1. Number 2, on the financing side, again, we need to have a relook at entire priority sector lending model. If we don't accept it, it's not working, we'll never accept it in the future. Why 40% of farmers in India today don't have access to priority sector lending? More than 40% probably, right? Why do we don't divide priority sector lending into input loans and personal loans? There's $180 billion worth of priority sector lending which happens to agriculture. Input sale India is about $60 billion, $60-70 billion. So bada clear hai ki 1/3 of around 30-40% is used for imports, and balance is going as personal loan, which is fine. I'm not saying no to personal loans, but start differentiating it. क्योंकि अगर हमें पता लग जाए कि भाई इतना इनपुट बिका है through loans, we will be in much better shape to figure out कि कहाँ पर कितना production हो रहा है, and our demand forecasting will improve multiple times. Let's digitize our input sales. At least the input sale which is happening through credit, I don't see a reason why it is not recorded and digitized. That is one reform I would like to see. Secondly, on post-harvest finance, I think that's a very small fraction of the total PSL lending, right? We need to create mechanism by which pre-harvest loans can be converted into post-harvest loans. I don't think we have a model around it. And I don't think why I can't figure out why it's not happening. जबकि pre-harvest में आपका risk बहुत ज़्यादा है, because there's a production risk, there's a weather risk, there's a pest risk. Post post-harvest is essentially market risk and pricing risk. Why we are not able to convert pre-harvest loan into post-harvest loan, and that we should be thinking about. I think there are solutions available to that. On post-harvest loans, again, the two biggest risks, one is market risk, second is pricing risk, right? And as Hari and Prasad all mentioned, key market risk can be addressed if we have a clear closed loop models, be it domestic market or export market, right? And the kind of work Sammunati is doing is trying to close that loop so that financing becomes possible, right? So I think it is again high time we should use this time to enable farmer access to market. Already some reforms have happened in last 2 weeks. Farmers are selling to cash and carry, farmers are selling to RWAs. Let's make it permanent. Let's give farmer the flexibility to sell where he wants to sell. Let not be a model APMC centric. You know, I think farmer deserves that freedom to sell, right? So I think opening of a market will probably reduce the market risk that we see as of today. Pricing risk. Now, अगर आपने 2010 में पूछा होता कि do we have enough data or enough models to price the risk, my answer would have been probably not. We are sitting in 2020. The kind of tech innovation that I have seen in last 5 years, I have not seen that in my lifetime. I think there's enough tech available. There's enough tech available to create those data models to price the risk. It could be very specific to a crop. It could be very specific to a location, and it could be very specific to a season, right? So to me, those are three pillars of on the basis of which this pricing risk will be determined, right? But I think there is enough data available, and startups have demonstrated it almost. Also, it's mostly on a pilot basis or in response to a client request. But if this modeling has to be done pan-India, if we want to have a credit scoring for all the farmers, if we want to credit score or even you want to have a risk sort of model for each crop, you know, it's not just perishable, non-perishable. I think we have to go down granular to a crop level, be it potato, onion, even that in a, probably to a variety level. But I think that's the effort that we need to make. Like startup can only demonstrate it works, but they can't create a risk model, right? So referring to Dr. Srinivas' point again, that it is right. What startups is to reduce the cost of sort of building and maintaining that platform. Right? But once we have these public platforms, our ability to model this risk will be very, very high. Right? So I think this is very, very fundamental to how we should be looking at the whole farmer financing and value chain financing. We need a paradigm shift, and you know, I think this is the crisis, because once the crisis is over, we'll go back to what was happening. We'll accept it कि कुछ नहीं बदलेगा. And I think this is the time we should come together and figure out this solution, which will help the sector not just in COVID or post-COVID, but for a long-term, maybe many years to come. So that's my submission to the panel. Thank you.
Hemendra,
yes, Ashish, we can't hear you.
so we will be opening the to the questions that audience has put up here, and we will be take up the questions. We will try to answer as many as possible in the time frame which is available to us. So I will start with a question. A lot of questions have come on financing part especially. So I would like to start with Hari. So Hari, one question is specifically addressed to you. Do you at Sammunati offer working capital solutions to vegetable and fruit farmers who have lost substantially due to logistic issues?
Well, we do, to answer that, we do offer working capital solutions to FPOs in the fruits and vegetables value chain. And many of them have been facing challenges at present, and we have been supporting them through these circumstances. Yes.
Kiran, one question here now, which I would like.
Ashish, your voice is low.
Okay, Kiran, one question which number of people have asked, that what happens, because if I am not wrong, there is a restriction that if the crop loan is outstanding for the previous season, it cannot be given for the next season. So what happens now if the farmers default on the repayment of their crop loan for the next season? Will they be able to avail loans? Are there any instructions or guidelines from RBI on this segment? Kiran, please unmute yourself.
Yeah. Am I audible now?
Yeah.
Yeah. So I was just saying that, RBI has given clear guidelines that there would be a moratorium of 3 months. For 3 months, they need not pay any interest or any principal. And after 3 months, for each tranche, there is a period of 3 months that is allowed. Secondly, they have also given clear instructions yesterday or today. The circular has come saying that even if there was an overdue earlier, that need not be declared as NPA for the next 3 months. Right now, RBI does not restrict any bank saying that if there was a loan earlier which is standing unpaid, you cannot fund, is not what RBI says.
Yes.
It is because there is a already outstanding loan. It is the individual bank's perspective on whether the bank would like to take additional exposure on that particular borrower or not. But if there is as I was talking regarding the supply chain kind of models, if there is a assured offtake of the produce, probably for the next season, and we have that supply chain, value chain financing kind of a model, I'm sure that still we can go ahead and fund, because there, that, the customer, the borrower, or the farmer is going to go for the next crop, and there is an assured offtake through which there will be, funds that would be coming into the account, and probably that arrangement would be such that the funds directly come into the loan account. While at this, the major risk or say challenges that the bank faces is mainly of two things. I mean, while there are four different risks, there are two major risks. One is the climate failure, maybe because of excessive dryness or excessive rainfall or untimely rainfall, and so on. And secondly, it is about the price volatility of the crop that they have gone for. So these are the two major, crisis kind of situations that arise, where naturally we have seen that farmers per se would not like to default. Farmers, I repeat it again, farmers per se would never default if they have the money to pay. But it is because of these vagaries where they are not insured, where there is no support from the insurance companies or from the government when there is a natural calamity, because of which they get into debts. So that is where they are unable to pay, and therefore they don't pay. It is not that they are able to pay and they don't pay. We have seen this, in most of the cases this happens. So absolutely, RBI never says do not fund if there is an overdue. That is for sure. I hope I have answered the question.
Yeah.
People were asking that, so that's great answer. So question one question here for Hemendra. The question has come that how do you see the role of NAARM in the current scenario, and especially is it possible that NAARM-led connectivity will lead to farmers getting more income as well as financing, and what is the role of government in that? How that can be pushed across India, as you mentioned?
Oh, absolutely. As a concept, it's a great concept, no questions about it. And the challenges, two challenges I see. One is the participation. To my understanding, it's mostly traders who are trading on the NAARM platform. We need to get farmers on it, and essentially the smallholder farmers. I think that's number one. We need a lot of cooperation from APMC to digitize transactions, to train farmers how to do trade on a NAARM platform. So I think clearly there's a huge potential. I don't think we have even explored 1% of it. Second challenge which NAARM is facing, or for NAARM to scale, is around grades, gradings of commodities. Unfortunately, of course, we have AgMark which defines grades, but we probably need to build more objectivity into grading, so that the transactions are remote transactions are possible. And again, as I said, there's enough tech available. Of course, we have used multiple laboratory instruments, hardware for grading, sorting, etc. Now we have application of image processing, which can throw up the grade results in a like super quick time. So we need to adopt this innovation so that at least for the key commodities like wheat or paddy or mustard or maize and stuff like that, we have some acceptable grades which can be used for farmers to upload the product, the quantity, the quality, etc., and for anyone else to make bid. So again, I think it's more of a political will which is needed. But it is again a good time and the crisis time to figure out solutions. We need to push for a strong sort of farmer engagement model if we need NAARM to be successful. Yeah, so I think it's more of an implementation issue than anything else to me. It's a great platform. It's a great concept. It will help smallholder farmers in particular to reach out to more buyers and hopefully get a higher price.
Thanks, Hemendra. Prasad, I would like you to answer this. Are banks in the planning to fund through e-commerce companies in the farm segment? There are banks who are funding vendors on platforms, e-commerce platforms like Amazon. Are there banks or the banking products who are funding to suppliers on e-commerce companies like Big Basket, Ninja Cart, etc.? And if it is there, what is the mechanism?
So I think it's kind of already being done. Mostly what people are doing, so that you can talk to any of the big guys, whether Amazon or Big Basket, and take the listing from them and then go and directly fund. So as I said just before also, there are purchase bills which can be discounted. That kind of financing is also possible, and it's being done. So this is what I would say, something like channel financing and all. So everyone is doing that. It's a standard product. Whether an organic milk guy selling to Big Basket, yes, against the bills, financing is being done. Or it could be it could even be dairy, it could be everything, meats, everything. All options are kind of possible. It's a very standard banking product.
Thanks, Prasad. Dr. Srinivas, you mentioned about the social impact of COVID crisis as well. And one impact which we are seeing is reverse migration from towns and cities towards the villages. So what are the solutions that can be used to engage as well help provide income, sustainable income to this segment, the migrant labor who have reverse migrated back to their villages? And do you think this will be out? Is this reverse migration going to be permanent to a certain extent? And if it will be there, how do we solve their income problem?
As per my assessment, what I was looking through different reports and all, probably reverse migrant is not going to happen again back towards urban sites very soon. It will take time. It will take 6 months to 1 year, maybe more, that those people will come back to the cities in search of jobs or something. So you have a situation where there is a labor availability in the villages. How to but at the same time they are all not MG Narega card holders. Can these people be brought into MG Narega, or can these people be used into the agricultural labors which probably they did not like, that's why they have migrated out? We have to look into these things very carefully. In the same time, in urban areas, you have a shortage of labor now. You will be seeing most of the factories where labor use is too much are going to really suffer. They will be trying to converting themselves into the mechanized farming of production, whatever the way they are going to do it. So you have a situation here and we have to address it here. And probably the best way we can address is here is increasing more of the at least primary and secondary processing unit in the semi-urban and rural areas, where they can have at least a primary and secondary processing centers, which can create a big impact on the pricing of the farmers. But for that, again, everyone of us have agreed that there should be some type of collectives, and these collectives are good in the form of FPCs and FPOs that we have to really strengthen. So our my take is basically to really strengthen the FPOs, which can also help in the ENAM platform, because individual farmer selling in the ENAM seems to be a bit difficult. If you are through an FPO and if you have a sufficient amount of the production, you can sell it into the ENAM also. That's what present situation is, that FPO need to be strengthened. They need to take into the account these labors also into their view. Hello. Hello.
Thanks, sir. Yeah, that was a great answer. So we are almost running out of time now. We have crossed the 1 o'clock timeline. But one last question which I would like to ask, and that is a question which is targeted towards. I would like it to target to. I would like to ask all the three people from the banking side on this, that what are the possible procedures to quickly disburse fresh working capital to FPOs instead of traditional lengthy documentation process. So to Hari, Kiran and Prasad, one by one, all three, if you can answer, please.
Kiran here. Specifically speaking, if it is in terms of producer company, then certainly, once the produce comes to them, there are options like, WHR financing, which are the quickest, in the market, if you compare it with a regular working capital, which requires collateral security and all. Under WHR, that is warehouse receipt financing, you don't require any collateral other than the commodity that is available with you. And therefore, I feel personally that this is the quickest way of funding, where funding can happen in a matter of 2-3 days, not more than that.
Thanks, Kiran. Hari, how can you make the process simpler, faster, and easier for the FPOs?
Well, see, as far as Sammunati is concerned, our processes are among the more efficient ones in the industry, and given that our customers are, especially FPO customers, are drawing their limits, and we are dispersing for the current harvest season, we'd be happy to help. Of course, it's a function as a non-bank. We are also dependent on liquidity from banks and the markets, and therefore it is a function of our own liquidity as well as the confidence on getting fresh funding, which is a function then which translates into our onward funding to customers. But we are already supporting all of our existing customers, and our procedures are pretty efficient. I would concur with Kiranji in warehouse financing being the quickest solution so far, because there is a commodity, there is no more this thing. Wherever you have an existing lender, including Sammunati, but also some of the banks have announced emergency funding lines for existing customers. So there again, you are able to draw 25%, 50%, or a sum of 10, 15, 25 lakhs per FPO as a line of credit. So wherever there is an existing lender, the recommendation is to leverage that. And of course, value chain finance solutions remain among the faster financing solutions, because they are taking cognizance of buyer-seller relationships. I'll stop here.
Thank you, Hari. So Prasad, the last question to you. How Yes Bank is working in this segment, and is it in a position to fast track the processes for the farmers, FPOs, etc., and what it will take for that?
So I think, FPOs, what we have seen is either input aggregation and, selling within the own thing, or mostly it is also, output. I think the quickest way, to fast track everything is that if there are some processors, and if there is a quick tie-up that can be done, because right now I think about 30-40% material whichever has been lying at various legs of the distribution, that will get absorbed. So fresh production is needed quickly after 20th of April. So definitely and material is not going to come so quickly. So ideally what we could do is that FPOs and all, getting them quickly tied up with reputable blue chip processors that whom we know, and then trying to quickly see if we could bridge the financing requirement. I think that could be a way. And alternately, obviously, working with entities like Samunnati and trying to see if they could onward lend, that could be an option. But to do some closed loop systems, that's the quickest way we look at. And as I said before, even if we could buy out the bills which these guys supply to the large scale process, that way, so that there is some liquidity, quick liquidity, which is given to the FPOs for the material which is supplied.
Thank you, Prasad. So we have almost run out of time. We have exceeded that by 6 minutes, by the way. So we would like to close. There are certain questions which have remained unanswered. We have noted that down, and we will send the mails to all the participants who have asked any question. We will reply to all of them, and the panelists will be very much happy to take that offline. So with that, I would be closing this webinar now. Very much lot of thanks to the panel for taking 1 hour of their valuable time, rather almost 1.5 hours of their valuable time, and spending it here for the knowledge enhancement of the people here as well as the audience. And rather, we are really thankful for all the audiences who joined here, and I'm hopeful that it has been a good experience for them. Thanks a lot, everyone.